Hi everyone. So just to kick off, before we get into the questions, I'll just ask everyone to introduce themselves, if we can keep it brief, because we've got a lot of questions to get through, but just name, company, and job title, and then we can get into the discussion.
Just name and job title. Okay. So Oliver Prill, CEO, Tide. We are a small business platform in the UK, serving about 14% of the UK market.
Hi everyone, I'm Caroline Stretton. I'm head of product at TrueLayer, looking after payments, and TrueLayer, we're the leading open banking payments network in Europe.
Hi, David Shinkins from Barclays. I lead basically coverage and lending for Barclays in the UK, of which the innovation banking and innovation economy is part of my team. So.
Hi, Jason at Epos now. I lead the product team. We're building an AI platform that helps merchants run their business, covering payments, capital, and banking solutions.
Hey, and I'm James Dunne. I'm Chief Commercial Officer at a wealth management technology company called FNZ.
Great. So firstly, was there a specific moment that your company stopped being a scrappy disruptor and became a business that people really rely on? So I think first, can we go to Jason?
Sure. For me, we always cared about the merchant because they're running their business on our platform. Any downtime, any instability, the merchant is waiting for a customer to pay, and there's huge awkwardness and poor NPS scores. For me, the step change was going into another market, and we started in the UK, and you had this, everything's fine, you've got the night, you can fix stuff, things are quiet. Of course, merchants will still trade if you're a nightclub or something. But then you jump into the US, and then there's no downtime. Everything has to be perfect. And now we're in 10 markets, and of course, everything has to be perfect all the time. That was the real kind of jump in terms of ownership for me.
And I know, James, you've got a different perspective on this.
Yeah, I guess when did we go from startup to trusted platform? I was thinking about this probably when we started wearing jackets like this and stopped wearing hoodies. But I don't think there was a single moment. It felt very much like a gradual evolution. You know, if you define the early days, and I wasn't there at the early days prior to this, I was at a multinational bank. But you speak to the team, and they will tell you that it was very much a sort of fast, entrepreneurial, problem-solving period, and they took a lot of pride from working with clients to solve issues, and a lot of pride from that. I think the shift happened when FNZ clients were a B2B to C platform. They started to rely on us not to solve technology problems, but to be core infrastructure. That's probably the step change. A kind of place where, you know, we're no longer a platform that people try, but they're a platform that they absolutely rely upon, not only for the day-to-day, but for their strategy as well and for their operating model. So, you know, we manage at the moment $2.4 trillion globally. That makes us systemic, particularly in the UK, where there's 1.4 trillion on the platform. So it's really a relevant piece, and I guess the step change was probably defined by two things. Number one would be when we felt we had consistency at scale, and the second was when we started to have deep client relationships rather than almost surface level problem solving.
Great. And I know obviously there's been a lot of criticism about the UK and the level of support for startups. When it comes, what is it about the UK ecosystem that has slowed you down? Caroline, perhaps if we come to you.
Yeah, I mean, I guess I would, maybe as a segue from the last question, we have had a massive moment in open banking where we're talking about it as the Amazon moment, where now, TrueLayer, we're live now with Amazon. The reason why we're using the term moment is comparison to the TfL moment for contactless, where maybe contactless was starting to take off, but it wasn't mainstream. Then everyone tapped their cards to get on the tube, and it really took contactless into the mainstream and made it a critical thing. I think it's a similar stage for open banking now that we're live with the likes of Amazon, eBay, Just Eat, Ryanair, Last Minute. These are huge names. We've got that consumer side to factor in. But the thing which is slowing us down is regulation. I hate to say it because maybe there's going to be some regulators in the room. But I think what we've seen is, particularly for recurring payments in open banking, we now have pay by bank where people can make one-off payments really easily, and that's great. But we want to get to the stage where recurring payments can be just that one-click experience for our clients and users. And we're seeing progress. We're about to go live with a new phase of variable recurring payments, they're called in the UK. And for TrueLayer, we're building a bigger bank on file, we call it, product on top of that solves this problem and makes it one click. But we have bigger ambitions. I think that's the thing to highlight here, that regulation's currently not keeping pace on. Things like point of sale for open banking, where we're piloting, but we want to solve it at scale. So we were really excited to hear from Rachel Reeves announcing a package to support this and another look at open banking for the new phase. But we want to hear more details and go faster.
Right. And what's been your experience, Oliver?
Yeah, so first of all, I think looking at the UK, we can often be quite negative, right? So I think the UK had a head start. It's still, the markets we're in, India, Germany, France. People look at the UK and they realize there's something, there is a fintech crown, I think as some call it, that's there. Having said that, and that's why I think we all have a duty, right, when we go out, not to be too negative about the UK. It's fine to be self-critical, but not too negative. I think in more recent times, what has happened, I've seen in the last 5 years sort of the following change, right? There was this early head start. Then what happened, actually for a period of time, there was very little, right? Then with this government, but also the previous government, there was a lot of commitments. You talked about open, evolving open banking into open finance, smart data, new payment architecture, payments vision, stable coins and so on. So there's great intent on all of it. And I think that's, where the UK is at now. I think what our message, and I think some people here would have been in the room with some of the people we met with the government, was to say we now need to execute around them, right? I think my sort of advice to the UK is, take one or two of these things and actually make them happen, right? Rather than try to solve everything at a slow pace. I think that's where the trade-off in the end comes. But having said that, having seen other environments, we should be very proud of what the UK has achieved. And I think it's still a great place to start a fintech and grow a fintech.
And David, obviously I know you come at this from a different angle.
But in all fairness, I'd agree with Oliver. Right, actually, I sit back and think we should be really proud, right? Because if I think about, particularly the opening up of the banking system, let's take us back a long way back to open banking, like the CMA deregulation, right? Really important step change. We saw how effectively the large-scale banks effectively supported fintech growth, right? So payment providers, wealth providers, all providing access effectively to what was probably arguably quite a challenging ability to enter from an incumbency perspective. So I think that's really exciting, right? And I think, interestingly, we were touching about earlier, if you look at the level of funding, particularly in the UK market, there's substantial funding available to fintechs and particularly available to early stage startups. So as I mentioned, one of the teams I lead, I'm lucky to lead the innovation bank for the UK for Barclays. And as part of that, we see many micro SME startups really going through all the way to scale to IPO, and that's really exciting. Particularly on that journey. But what I would say, though, is innovation and also regulation needs to evolve with the times, right? That's been a long journey for us to go on. The critical thing, though, of course, is that we're all there to support the economy and the ecosystem which we operate, right? We want the UK to thrive. We want effectively the entire ecosystem to have the opportunity for all. And at the same time, making Britain prosper, right? That's really important to us.
Great. And thinking outside the UK now, how do you manage operating in multiple jurisdictions when the UK regulatory framework doesn't necessarily map internationally? And how do you navigate that friction? Perhaps if we go to James, that one?
Yeah, I'm just going to reflect a little bit on that last question, if that's okay, because it really got me thinking. There's not a regulation that I've seen in my time with FNZ or prior to that with a multinational bank where the regulator hasn't had the consumer at the heart of what they're trying to do. And I really feel as though we should be proud of that. And whatever industry we represent or operate within, what it certainly does is it creates trust in that industry, particularly from consumer to business. So I think that's a really important point to state. And in my experience, again, having worked at a multinational group, the UK was seen as a bit of a reference point and a lighthouse where things that happen here often were then exported to other locations. So I've always felt it to be a force for good. I can see an ex-colleague of mine in the audience, actually, who we had an innovation department, and often it was the regulation that was the catalyst for the innovative ideas that we then went on to address. So on that front, segue from that, of course, is your question on multiple jurisdictions. Like my past life and this life, it's always a balance of global consistency, I would say, but with local expertise applied. And at FNZ, we certainly aim to do that. That's a consistent platform that we can take to various markets, and then we make sure that we've got the right people in the right locations with that local know-how. So that's really important. Strong governance in those situations is really critical. So I think how we organize ourselves and how we export some of these models is really critical. I guess my sort of takeaway would be, we are now a scalable platform, but with that local expertise. So that's how we've tried to balance that local-global model.
And Jason, do you want to give your experience?
I think I'd just add to that. So we're now in 10 markets, kind of similar setup, kind of local expertise and trying to get closer and closer to the end merchant. The thing I may add to it is, as you go to the next market, the culture changes and then the business model changes too. So even though the platform may remain the same, it's like, hey, I need to service this merchant, they need to do point of sale stuff, payment stuff. But take the US for an example, CAC is much higher. In the UK, you can give someone a great experience and say, hey, I'm innovating, the experience is amazing. You go to the US, you're compared to Square and Apple Pay, and really they just want it to be amazingly perfect. The expectation is much, much higher. And if you fail to kind of consider that and redo some of your product market fit, then you're destined to fail.
Yeah. And Caroline, from your perspective in terms of building product, what's your opinion on this?
I think I really relate to what you're saying there, but I guess there are opportunities as maybe the positive way of looking at this, where at TrueLayer we are also scaled to over 10 markets, and from the product side, what I'm looking at is how can we get to that really, really slick experience for the end user and for our clients across these different geographies with different regulation and different payments landscapes. So we look at really closely kind of what the payment specific landscape is in each country, and make sure that in the UK we're diverging now from kind of the EU PSD2 original framework for open banking, but you can create, or we at TrueLayer create a kind of consistent product that a lot of our merchants are big US companies as well who maybe don't want to get into the weeds of European payments. So our job is to simplify that. Obviously, it gives us an overhead as well as the flip side, but there's opportunity in the differences as well.
And David, if I could come to you on this as well.
I sit back and think about, customer and client experience. I think interesting to the earlier point, if you think about consumer journeys, B2B journeys, how effectively can you simplify ultimately experience right now? I think what is really interesting, right, being both a large-scale acquirer in the UK, issuer in the UK as well, we get a lot of benefit clearly of both sides of issuing and acquiring, clearly having the end-to-end journey in view of data and of customer usage, and clearly ideally identifying commercial opportunities both for the bank, but also the customer experience, right, the needs-based assessment for those customers. But I think it's what's really interesting, right, we've seen, I think, over time, real disruption take place and actually, in fact, challenge the traditional banks actually in terms of how we operate and think in terms of client experience and client journeys. The key thing is how do you challenge that both with size of balance sheet, lending need, payments infrastructure provider, and at the same time deliver a better client experience. But I think it's ultimately, we always have to be customer obsessed, right? The first point is the customer's at the heart of the journey. It's how we need to design the journeys and how we're operating. And effectively, if you think actually traditionally how banks have now operated, is we've partnered, of course, with new institutions that are far more nimble, far quicker to market, and can be integrated actually across the entire journey, because we've effectively realised actually there are better players out there in some cases than we are, and actually they can deliver a far better experience. So I see this as part of being effectively a partnership model going forward. And I can give you many examples of how we partner with fintechs across the Barclays estate, but that's just where our thinking is.
And at what point did operational resilience become genuinely core to how you design and build? Was there anything that you had to stop doing? Oliver?
Yeah, so I think I think probably all of us are regulated in one form or another, right? So I think there is the tech scene that is truly unregulated, where you can go really, really scrappy. But probably, you know, if you're regulated, it's not a great idea, right? So there's a basic level of lack of scrappiness or organizational resilience that you always had, right? I think, though, there are various degrees of that. And I think for us, what sort of happened was at some stage we reached 1% market share, and at the same time, we started to have over 100 people. And I think the reason why the 100 is in particular, I think, one to sort of double click on is that at that stage you can't run the company anymore what I call the kitchen table, right? And I don't mean this in a condescending way, but when you're small, when you start up, the reason why they are ultra fast is there's a group of highly committed people that are operational resilience, available day and night, weekends, will burn the midnight oil, we'll just make the thing happen, right? And we'll make sure it works. And if the nightclub at 1 o'clock in the morning doesn't get their thing, right, someone will be there and fix it, right? At the stage when you come to 100, you need to introduce structures. You know, you need to have people that are domain experts, that maybe are of a, you know, work-life balance, where maybe, you know, burning the midnight oil every night isn't the greatest idea. So, you know, at that stage, you need to institutionalize things, right? And that's where I think the next level of resilience comes. So I think in a fintech, that's how I would look at it, right? There's a base level of resilience you need to have because we provide, to various degrees, critical infrastructure, we're regulated. But then there's the next layer where your organizational scale requires processes, structures, different types of thinking that maybe is more structured than when you were really, really small.
And Jason?
Just to add to that, I think the 100 is a really good baseline, where you're going from having these small teams that know everything and can solve everything to bigger teams and a bit more process involved. The thing that I think has been critical for us over the many years is understanding those signals for customer experience, and even if they're weak signals, kind of pointing them in the right direction. Well, first of all, having them, I guess, but then pointing them in the right direction and saying, look, this team has accountability over this signal. This thing means poor customer experience, whatever it might be, slow payment, some other issue, and then giving them ownership and accountability to solve. So it's kind of the processes and the signals and then kind of pulling it all together.
Yeah. And Caroline, I see you nodding there.
Yeah, I mean, we've scaled massively, you know, from when the company started. Now, you know, over 300 employees, and definitely with, I guess, the scaling. I agree with that kind of as a tipping point, but also I think it's the nature of your users, your clients, that for us has been really important for building that structure, because you want to make sure that someone is there to pick up the phone at 1 a.m. But it's not necessarily always that scrappy tiny group that you described. Now it will be, you know, let's make sure we've got the process that backs that up, and we have systems that support it.
Okay. And then finally, if we come to you, James.
Yeah, of course. I think the shift for us is when it was, you know, moving from platform builder to, you know, an infrastructure provider. I think that's we really took upon that responsibility for sure. And I don't think there was a single moment for that. It feels like, again, it's been an evolution. Again, speaking to people who've been in the business a lot longer than I. I've been in with FNZ for just over 15 months now. But on reflection, listening to them, I think it's built on two things. One is the scale of our business now, that it's a systemic business in UK finance. We underpin people's investments, and we underpin people's pensions, so we take on that responsibility. And also the regulatory focus, right? We've touched on that on this panel. And I've always found that regulatory focus to be helpful, in the sense that, you know, I'm trying to think of a useful analogy, but, you know, my daughters, they dance, and they love to dance in a crazy way, but I'm told that if they study ballet, they'll become better dancers because it's a core skill. I think with our business, that regulatory focus, and in some cases intervention, has helped us build that core, which has then allowed us to advance. So that concept of resilience can come in all forms, but, you know, that responsibility on scale and the fact that we are systemic with that regulatory oversight, I think has been helpful.
And I think we'll end it there. But thank you very much to our panelists, and round of applause.